All right, good morning, everybody. So other than Christine Lagarde, we really don't have a lot on the table today. Um, we got additional auctions, and the big prize is going to be tomorrow. We get another Christine Lagarde speech, a lot of European central bank stuff through the early part of the morning, and then durable goods tomorrow. We're going to get a lot of inflation data from May coming in this week. What you're going to see a lot of, it seems, is the global markets, and their take on inflation this week is going to be really big. So look at, say, finance juice along the side, and you can see how it just kind of stands out that most of the early part of the week is all European central bank stuff. Bank of England, ECB, right? So for the 26th, 27, and 28, that's going to really dominate, maybe even a little bit into the 29th. That's going to be a large part of what's going on. So, keeping your eye on the currency pairs of the global markets is usually a really quick heads up of how things are doing, right? So 11:30 and 1 o'clock are where the additional auctions are at. And then the survey, we don't want to say that it won't have any impact, but it is a survey. So volume's a little surprising today. It's nice to see that we're sitting above that 100. But on the other side of that, it's like curious for a Monday. Good number though, 100, sitting at around 100 is exactly where we want to be. If it was really light, we'd be concerned about why they're sitting out. And if it was really heavy, we would be concerned with, what are they reacting to? We were inside day breakout, managed to pull it back and get inside of yesterday's range for the moment, but we're still holding those lows. We do have a snow line at 43.71.5, and the ADR half is at 43.66. I mentioned last week how we had the opportunity for a trendline breakover day, and it really didn't come to pass, right? It's that one green day, and we were looking for a gap down and then a rally up that would finish higher than at least the previous day's open, and we didn't get any of that. We are getting really close to that 20. Pre-COVID, there was a buy the dip mentality, right? And it held pretty good, but every once in a while it needed a bigger dip. And the common dip size was about 5 to 7%. It needed to be just enough that your average trader said, forget it, and Max Payne dumped their positions. And then at the same time, not too much of a pullback where the CTAs and everybody else starts repositioning. This is just a very small pullback. This isn't anything, right? 2.63%. So, of course, that was pre-COVID, right? And we were looking at a different market back then. Everything is different. But just kind of keep some perspective on, how far we've pulled back. We're still above all the major moving averages. So let's negotiate with that 20 period before we consider that there's something to be worried about with this uptrend that we've been in. All right, so there's the daily 20, 43, 63, 62. And we know, it's the futures. So it's going to be at 59.5, right? At 63.50 or 64, something like that. Not too far away. Got to be like a first touch play in there somewhere. All right, 10-day, 30-minute volume profile. When we're at the low, we expect to go to the high. When we're at the high, we expect to go to the low. We made it through the point of control last week. It's not support, it's not resistance. It's just an area where the most trading has happened. And then you got to figure that the next time we get there, there's going to be a response in price, either because more people want to trade there or because it became a place to get out, right? Probably a million different reasons. But if it's a place where there was a ton of trading before, and it wasn't very long ago, the next time we get back to that spot, likely to be a reaction. Can be where the market pauses, consolidates. First touch plays, things like that. We are lined up with TPO. So in blue here along the right side, we got time, price, opportunity, TPO. So that's going to be a difficult area to get through, 44.15. If we were to make a move to the upside, and while the TRB is primed, we certainly don't have anything giving us that fuel yet. VPOC at 43.55. Bitcoin's down 2%. and everything else is either flat or just slightly up. So gold 1% and bonds 0.75%. We got KRE this morning, a little more than 0.5%, but we got it. We'll take it. We're starting to see a little bit of emerging markets. We still need more out of that. And KWEB just came up. So KWEB will be your China ADRs. JD, BABA, Baidu. Not much. I mean, I expected more. All right, bonds are making the move. And so far, they're doing it alone. We're not getting any kind of stock bond grouping. It is interesting to note that the ES started making the drop before the bonds started making their rally. If we were just to approach that from a simplistic point of view, right? Totally simplistic, making a lot of assumptions that they wrapped up their money in the ES, took some money off the table there and put it into bonds. There's a lot of assumptions to that. All right, so with the dollar, last year, every minute this thing moved, every penny up or down. We were watching it because we had a total inverse reaction in the S&P. It was awesome while it lasted. And of course, those days are done now, right? It's gone. But what we want to continue to use the dollar for is more of a big picture, kind of a line in the sand. Is it, above 103, below 102, and then, kind of use that for thinking about, well, how's this going to affect the market? If we break support and fall out of 102, does that lower dollar help us out, or is it going to help at all? Is it going to work against us? That would be the approach. But so far this morning, we got nothing. So until the dollar gives us something, and by that I'd say, let's see what happens when it gets above 103. And let's see what happens if it gets below 102. Because as long as we're still sitting in between and we haven't done anything, then the dollar is really not going to help us at this point. It's not going to help. It's not going to hurt. It's not contributing to anything. I would never say that we don't need to watch it, because I definitely continue to revisit it through the day, seeing what's going on, keeping my eye on it. But I gotta say, I'm gonna use the chart space for something else more through the day, and not be checking on it every 2 or 3 minutes, because the dollar is just not going to really provide much at this point. It's got to change. And the easiest way to approach that would just use this day from the 15th. It's got to get outside of that day. And until it does, don't really need to watch it too bad. All right, this breakout in the bonds, it looks great on the lower time frames. But when you step out to the higher time frame, I'm on a daily, you can see that we're at this level that has continued to be resistance. So we'll see. We got 129.5 as a line in the sand to the upside, and that's a long ways off. It might not seem like a lot, but for bonds, from where we're at now, it'd be a 1 point. It'd be a 1 point move, and that'd be a heck of a change. All right. So US dollar Japan still sitting in underneath this monthly level, 143.5 basically. As long as this continues to sell off this morning, we're going to continue to expect gold and silver to do well. But I'd be keeping my eye on this for that 142.25. See if we're going to actually get any support. Still, there's nothing else there. So for a short-term long trade, say, for Friday in gold or silver, maybe miners. And then you'll want to defend that position if it looks like this is going to catch support at 142 in this, call it 142.7. Because if this catches support and begins to rally, then those gold and silver plays are they're gonna dump. All right, it was kind of a mixed bag Friday, and only into the afternoon did things really start synchronizing. You can see where KRE, regional banks, and NY Fang both started moving in the same direction in the afternoon, right? Not right away. KRE rejected first. Excuse me, NY Fang rejected first, right at yesterday's high or that Friday's open. And then within 45 minutes, KRE topped out, got back below that VWAP, and that was a nice little heads up, right? When we finally got that flip over and it started to join the party. But breadth, it stayed pretty negative on Friday. Look at that rally from like 11:30 to 1. We barely saw any change at all in the advancing declining issues. All right, Google's down this morning 120.66. So we're pretty close to Thursday's open. And the thing is, being down this morning isn't necessarily bearish for Google. So we do have this lower high and these lower lows. We're getting the start of a downtrend. But right now, that Thursday candle needs to be resolved with Google. A breakdown below 120, could offer you, say, the low of and maybe an overshoot. But I'd look for it to kind of slow down around that 118.85. And that's if we actually get a breakdown. It'd be the low of last week. So for Google, if it breaks its own Globex low at this point, that would be a good trigger for a short. You could get an LRE that way. Either a short off of this open gap or a short below the Globex low. All right. So we had a lot of moving around in crude, and we're basically just a little better off than when we started last night. So we are setting some lower highs and lower lows. But we are just barely inside day breakout. For the third time today. You know, I think what it's going to take to turn things around today should be pretty obvious to see. And then if you don't get that, then you just kind of hang out and either don't trade or put on a sideways trade. So we're inside candle on a lot of names that matter. So until that changes, it can just be your line in the sand, right? For the ones that already broke down, say like Google, I mean, it's already started, but don't let that lead you to think that it's going to take the market that direction, right? Like, so Google's down. That could just be a reflection on Google, not the FANG names in general or the market overall. So I think that's what I would lean on today. Inside day breakout on both the indexes if you were looking for confirmation. Otherwise, just on one ought to do it. And then with a group. So say, you know, inside day breakout in the Qs, and you got the KRE with an inside day breakout, something like that. That's what I got for you guys. I'm see y'all tomorrow.